All right, let's get into it. So
Get into it. Why not?
one of the things that we hear a lot, let's go back to the public markets, right?
Yep.
Everybody has things that are important to them. Maybe they don't want to invest in pharmaceutical companies, or they don't want to invest in oil companies because of climate change, or, whatever the situation may be. People like to take their personal beliefs and, implement it into their investing, which is great.
Yep.
Okay. I don't think many clients understand the reality of what true private equity is, because true private equity is, buying a business, gutting it of any expense you can, making that bottom line look good, and selling it off as fast as you can. And that generally involves, gutting benefits, killing pension plans, laying off employees,
That's like
selling the hard out. I mean, there was just a case I was just reading about, a company that invests in nursing homes.
Mm-hmm.
They bought all these nursing homes. They sold off all of the real estate. So now all these nursing homes have to pay rent. Mm-hmm. They sold off all the real estate, got rid of all the, a bunch of benefits, took out a bunch of loans, and then they declared bankruptcy. Not the PE firm, but the nursing home company.
Mm-hmm.
That wasn't a failed investment, even though they declared bankruptcy, because they already got their money back on all of the real estate sales and loans and stuff. So I'm not saying private equity is immoral. That's not what I am saying. There's definitely a sleeve of it that certainly is. But, you got to understand what you're investing in. And if you're a conscious investor, beware.
It's like Gordon Gekko type stuff.
Yeah.
Yep. All right. So I'm trying to articulate a good question here, but where does all this private equity money come from?
Investors, right? They just raise money from everyday people,
from high net worth people.
I should say high net worth, because there's requirements on.
So a group gets together and they create some kind of a strategy.
Yep.
Right. And then they will go out to an industry or multiple industries, I guess, depending on how big the group is. And they will start to buy businesses.
Yep.
Correct?
Yep.
And you as the investor, okay, what is your standing in that particular investment?
Well, you're probably a limited partner. I mean, you have no say in anything. You just
okay. So let's define that first and foremost. Most of these private deals, you are going to be what's called, in business terms, you have general partners, who are the people that really are the operators.
Yep.
Okay, of the private equity fund or whatever it would be, and then you have most of the investors, which are the limited partners.
Yep.
And as a limited partner, you don't have any say over the investment strategy. You don't have any say over when you get your investment back. Nope. You don't have any say over distributions taken. You don't have any say on the frequency of distributions. You don't have any say at all.
No.
Correct?
None.
Okay. You have limited liquidity.
Limited to no liquidity. I mean, most private deals, they give you a target timeline of, okay, we're going to buy whatever asset class they buy. We're going to, raise the profit, and we're going to sell it off in 5 years.
Yep.
There's no requirement that they sell it off in 5 years. They might sell it off in 8 years. They might sell it off in 2 years, but you're not getting your money back till they sell.
Correct. That's right. You're not getting your money, and you can't call them up and say, hey, I need to liquidate this money.
No,
because
you're in it to the end.
Yeah. So people have to think this through when you're kind of developing an investment strategy. And again, I don't think it's bad for someone to invest in private equity.
No,
I don't really at all. I mean, we have on our platform, we have private equity offerings, right?
Yeah.
We have the ability to allocate certain money. And again, you have to be what's called an accredited investor to be able to qualify for this, which most of our clients are because they're in that in that range.
Yep.
But to think that it's gonna save you from risk, to think it's gonna save you from volatility, to think it's going to enhance your return potential guaranteed over public markets or your own business or other real estate that you have. I don't know. It just does that part doesn't make much sense to me.
Yeah, I mean, returns from private equity over the last couple decades have been strong.
Yeah. When you say strong, well, I mean, I guess it all depends.
Very close to the S&P 500.
Okay.
Right. But this is the part that I don't get. When a client says, I don't want to invest in the public markets because I don't trust them, it's too risky, it's this, it's that. The public markets are extremely regulated.
Yep.
Extremely regulated. There's no regulation in private equity.
Not really.
You know, minimal regulation. So, that just doesn't make sense.
Yeah. So to say that your money's going to be safe and it's in good hands, I don't know that. I really don't. I mean, you are literally putting your money in the hands of an operator.
Mm-hmm.
And you better know for sure whether that operator knows what the hell that they're doing or not.
And it doesn't even always matter if they do.
They don't really, because they just may be in a sector or an industry that's doing well.
Like right now is a perfect example. There's tons of private real estate deals, right?
Yeah.
It's been one of the hottest things.
Oh my God.
Most of those private real estate deals that a couple of years ago were generating these phenomenal returns are paying no return.
Nope.
No income, maybe a 2% income. And I'm not going to say most of them, but some of them are
a lot of them
failed upside down.
Yeah.
Money's gone, lost. So,
or they've had to do what are called capital calls, which is basically where they they call up the investors
and say give us more to save us.